Hello friends, today I will discuss regarding depreciation, that is the difference between the SLM method and WDV method. Okay, I will start. Depreciation. We have an asset. Take an example, we have an asset, value is 1 lakh rupee and the life of the asset is 10 years, right? Scrap value is 10,000 rupees. Now we want to do the depreciation for this particular asset. First we will understand what is SLM, then after we will understand what is WDV, then we will see the difference between both, right? SLM in the sense straight line method, means every year depreciation will be fixed, means how we will calculate, we will see. Depreciation, I calculate the value of the asset, what is the value of the asset and what is the scrap value we are getting at the end of the life of the asset, divided by the number of years, how many years we can use this particular asset, right? So here the value of the asset is given 1 lakh rupee and the scrap value at the end of the 10 years we can expect 10,000 rupees and the machinery is expected to use for 10 years. So I can say the depreciation is 1 lakh minus 10,000 is 90,000 by 10 years is nothing but 9,000 rupees is the depreciation per annum. It means it is a SLM, right? SLM in the sense straight line method. Every year we will be debiting, this is the amount 9,000 rupees from the balance of P&L and this is the amount will be reduced from the balance sheet asset, right? So first year, end of the first year I can say, end of first year I can say the value of the asset which can be shown in the balance sheet is value of asset is 1 lakh rupee at which we purchased and 9,000 rupees is the depreciation we are doing for first year. So I can say 91,000 rupees is the value of the asset in the balance sheet. Then what about this 9,000 rupees? This 9,000 rupees is the depreciation. It can be deducted or it can be debited from the P&L. Means it will be debited, not can be. It will be debited from the P&L. Means 9,000 rupees is the expenditure for the first year and the value of the asset at the end of the first year we are showing in our balance sheet is 91,000 rupees. Clear till now? Now we will go to WDV method. WDV method, return down value. Return down value in the sense, here we don't talk about this scrap value, we don't know how much we are going to expect at the end of the 10 years. So what I can say, WDV is, I am taking example as a 10%. 10% means the value of the asset is 1 lakh rupee. I am decided to take, means there are so many factors to decide what is the rate of the WDV and all, but example I am taking 10% is the WDV rate and the value of the asset is 1 lakh rupee. We don't know how much we are going to get at the end of the life. So what we can do, we can say depreciation is 1 lakh rupee is the asset at which we purchased and 10,000 rupees is, 10% is a depreciation. It means 10,000 rupees will be deducted in the first year depreciation. Then how, what is the treatment in the balance sheet and P&L? See, in the balance sheet, I will write 1 lakh rupees is the asset at which I purchased and 10,000 rupees is the depreciation I am doing. So 90,000 rupees is the value of the asset in the balance sheet at the end of the first year. So this is the first year data. Then what about this 10,000 rupees? This is the depreciation. This is the depreciation will be debited from the P&L. We got 1 lakh rupee, right? All together. Yes, first year is the scenario like this. Then what about the second year? Second year, I can say again the depreciation rate is 10%. Now I should not do this 10% on the original cost. My value of the my book value of the asset is only 90,000 rupees. So what I will do? Depreciation for the second year, 90,000 rupees is the book value of the asset. In this I will be debiting 10%. Means 9,000 rupees is the depreciation for the second year. Again, what is the treatment? Treatment for the balance sheet. 90,000 rupees is the value of the asset minus second year depreciation is nothing but 81,000, and the P&L treatment. P&L treatment is 9,000 rupees. Right? Now coming to this one, in SLM for the second year depreciation, I am saying second year depreciation 10%, it is a SLM method, straight line method. The value of the asset will remain like this only, 1 lakh rupee at which I purchased. So 1 lakh rupee is the value of the asset minus scrap value what I am expecting at the end of the 10 years divided by number of years I am expecting to use, 10 years. So in the second year also will remain same, that is a 9,000 rupees. By this what we can understand, in the SLM method there is no change in the depreciation. Depreciation amount will remain same throughout the life of the machinery in SLM method, that is a straight line method. But coming to the WDV method, here depreciation is changing year on year. See, first year depreciation was 10,000 rupees and second year depreciation is 9,000 rupees. Third year will be gradually decreased if you do in the same manner. Right? So SLM is used for the industries or for the companies, we can say, where the asset has minimum or where the asset has constant maintenance, means no fluctuation in the maintenance cost, then they will go for the SLM. But WDV, when the asset has a fluctuations in maintenance cost, then they will go for the WDV method.